And then the dollar rand, 9 Rand 30, that's near the top of the range that it's been at in that trend of weakness in the last 10 days or so. It did strengthen to around about 926, 927, weaken now at around 930. So joining me now to have a look at the markets is Andrew Dittberner, who is Senior Investment Management at Cannon Asset Managers. Andrew, let's look. It was quite a strong day in Europe, and if you look at the last week in Europe, it was 0.2 or 0.0 something. Actually, 2/3 of a percentage point, for example, on the FTSE and on the DAX. S&P also showing strength. Our market, though, slightly down today, so we didn't follow that.
Yeah, it was surprising to see that. Obviously, we had a week of bad news last week, and then with the Cyprus deal, or they managing to come to a deal in Cyprus over the weekend, it was expected to see markets stronger, and that's what we saw this morning.
Yeah.
Across Asia, all the markets were up, and in Europe today as well. So it's surprising to see that the All-Share Index was down. Resources dragged down. You can see there, I think they're down about 1.5%. We've come to expect that. Resources over the past year have done particularly poorly. This is on concerns around the global economic recovery. And then the large cap industrials continue their drive up.
Well, the exception there is SAB Miller today, just slightly down, but Imperial up, as I said, 3.5%. Where's Richemont over there? Just slightly up. Remgro up a percentage point. Massmart retailers, how are they doing? 1%.
Yeah.
Truworths up.
I think your large, what we've kind of seen happening in the markets recently, and I say recently over the past year, is your large cap industrials that generate revenue not just from South Africa but from abroad as well. They've been doing particularly well, and this is the likes of your SABs, your Richemonts, Naspers, etc. These guys are now beginning to look exceptionally expensive. When you look at price earnings ratios, when you look at through the cycle price earnings ratios.
If that the rand weakens further?
Yes, exactly. We've seen value now, or we see this as a stock pickers market, and we've seen value in your smaller cap industrial companies, and these include your construction companies, some of your logistics companies like your Grindrods, Trencors, etc.
OneLogic is another one there?
OneLogic is a very nice little company. Yeah, that's a micro cap, so it's off the radar, I think, of a lot of institutional investors. But we definitely keep an eye on it, and it's done exceptionally well, and that's a very good case.
Also good to keep an eye on smaller companies that might tell you what the larger companies in the sector are going to do. I think sometimes the analysts overlook too many of those smaller caps, which can tell them interesting things. Let's look at some of the corporate announcements today. African Bank, 2 billion rand in a bond issue. Now that comes at the end of a difficult period for African Bank.
Yeah, I think African Bank, if you look back over the last couple of years, with the Ellerines deal, I think they've battled to bed that down. I think that's past them now. And you've seen them grow in their book or their advances at about 20% over the past 5 years. They're obviously not a bank in the sense that they don't take deposits. I think they're beginning to move into that space now. But if they want to continue to grow their book, they need to fund it from somewhere, and hence they've done this deal.
But short term, they've also had a bit of a reputational issue. They were accused of reckless lending, and it appears that was a fraud rather than reckless lending.
Yeah, I think there was a couple of employees that misbehaved there rather than...
But they had to fight the reputational damage.
Exactly. And I think if you look at the valuation now of African Bank, it's looking exceptionally attractive when you compare it to the likes of Capitec, which, although Capitec's a transactional bank, that's the bank you kind of compare it to. And even if you look across the big 4 banks, African Bank at the moment's got a return on equity in excess of about 20%, and that's sitting a price to book of about 1.6, 1.7 times. If you compare that to Capitec, sure, the ROE is slightly higher at about 24%. It's got a price to book over 3 times. First Rand, and another good case in point, ROE about the same as African Bank, but a price to book of 2.5 times. So I think at these levels, African Bank is exceptionally attractive. It's been hurt by the reputational damage, as you say.
I think the market saw through that, but it was static. They had to deal with it.
So if you look at the share price, I think over the past year, it's down quite substantially when you compare it to a Capitec or even a Nedbank for
So you're saying
example.
Some value.
So I think there's definitely value to be had from African Bank. We like the share at the moment.
Let's talk about famous brands. It seems that every week Kevin Hedderwick, the chief executive, makes another acquisition. I'm wondering if there's going to be anything left in the food business for him to take over. Down the line, there must be something to do with competition issues coming up here. But this is the deal with Turn and Tender, which is an old family business established in the 70s. Good little restaurant chain, and now I'm not sure if he's acquired them or if he's joint venture.
Yeah, I think he's not buying the company in its outright entirety. I think he's taking, it was 50 or 60%, somewhere in that region. Yeah, it's a fairly small transaction, so I don't think there's too many competition concerns at the moment. But when you add up what they've done over the past years, I guess down the line there could be. If you look at that little sector, you've got Taste Holdings, they've done exceptionally well as well.
Spur.
And then you've got Spur, and Spur's the old one. They're kind of seen as the boring company out of those three in that sector. That sector probably as a whole looks quite pricey. Famous Brands has done exceptionally well. I mean, it's a high quality management team. They've done some very good transactions recently. And you've seen this in the share price. I think it's up substantially.
Should you still be buying it?
So on a PE of 30 times now,
yeah.
I think this is looking more than fully priced. In fact, I think it's looking expensive. Definitely wouldn't be going there.
It's one of those shares you should have bought 10 years ago. But
exactly.
It's too late.
Put it in the bottom drawer and forget about it 10 years ago.
Yeah,
but
and it was a family business with a professional manager who came in, and eventually they said to him, you do it. He was the chief operating officer, he became the CEO, and he's just been driving it.
Yeah.
And then Exxaro, a lot of, I was just saying to Tiens earlier, it shouldn't be good news that Exxaro is producing coal. That should be normal. But it's back to normal, and there was concern about it.
Yeah, I mean, in the environment that we're in at the moment, or all the resource companies are in, it should be the norm to be producing. Unfortunately, right now it's not. It's nice to see that this 2 or 2.5 week strike has finally come to an end. I think, it had very real concerns for the economy. If Eskom didn't have enough coal, there would have been some, the economy would have taken a very big hammering. So thankfully, they've managed to sort this out. Exxaro, from a valuation perspective, I think it looks quite attractive. I'll definitely be having a sniff around here, although it's on a PE of 15, which looks like fairly valued. If you do a sum of the parts, when you look at what it owns in terms of Sheshen Iron Ore, it's then got the Tronics business and their mineral sands business. And then if you look at the ramp of it, I think there is some value to be had there.
And something I missed earlier, but you told me a moment ago, just before we started talking on air, was Trencor, a special dividend.
Yeah, Trencor, this is what they essentially do is they own a business in the States called Textainer, and that's containers which sit on the back of ships. So you
don't actually have to do anything. You just watch containers move around, and that makes your money.
Exactly. It's a pretty easy to understand business. They used to own a majority share, and towards the end of last year, they sold this down, and they now only own 49% of this business, Textainer, and that's essentially what makes up Trencor. We are surprised by this transaction. Why do you want to sell down and lose essentially control of the business? Because now they only own, I think, about 49 or 48%. But what it did do is it gave them a war chest of cash, and investors were expecting this special dividend to come, and eventually today they announced it. I think there's about R3.60 a share, and it's trading at about R75. So it's a very nice special dividend. It was expected by the market there.
But just go into why they did that, and they've put out a dividend, but what do they want to do with the business long term if they're not controlling it?
Exactly. This is an answer that we've actually been trying to get from management, and we're busy putting a letter to them now. We've asked them a few times, and it doesn't quite make sense to us. Why would you want to sell down and lose control of essentially your only asset? It's a bit surprising, and hopefully they'll come back to us soon.
Yeah, at an extreme, the doorbell company, where they sold off things to focus on a core business, and then there was no core business. The company actually disappeared under the investors' eyes. Now that's an extreme case, but you do ask when the major business is being sold down.
Yeah, exactly. It's a concern. We are holder of Trencor. We brought it about a year ago. So it was definitely a concern, and hence why we're chasing it up. We've spoken to other shareholders who are equally perplexed as we are. At least they gave the cash back to shareholders.
All right, short term, that's nice for them, but long term. You mentioned stock picking. Just to finish off, what would your eye be on now? What sectors would you be looking for those stocks?
I think I touched on it earlier. Your logistics companies, likes of OneLogix, Value, these are fairly small companies. There's some very nice IT companies at the moment. Pinnacle Technology is one that we've liked for a long time. They've continued to do well. They've shot the lights out year after year, and they continue to do so. it's very attractively priced. If we then go and look, I think from a super sector level, there's definite value to be had within resources, and we like the diversifieds, and these include your Anglo-Americans, Exxaro,
I was going to ask you
Sasol.
about Anglo-American and Billiton.
So yeah, Anglo-American and Billiton, you know, both very similar companies. I think Billiton's got a bit more oil exposure than Anglo's does, but yeah, at the moment we like Anglo's.